Bankless Nation, it is the second week of October. It's not feeling like October though on the week, David. I think our prices are down, but gold is going up.
Something's
so
up.
maybe there's some hope there.
Something's
right?
up somewhere.
We're going to talk about that, right? We're going to talk about gold at all-time high. We actually did eke out a Bitcoin all-time high last weekend, so it's official. Technically, the NASDAQ and S&P are all at all-time high. What do we make of all this?
Yeah.
Like, what does all this mean? It seems like there's a debasement trade going on at the same time as an AI trade. And how is that going to play into the crypto cycle? We got a long discussion about that ahead.
Not just Bitcoin got an all-time high, BNB has been pumping, third largest crypto asset now this week, valued at 2 Coinbases. Why? Why is it doing this? What's going on over there? And what's going on the Asian market? Because Asian tokens are just up. CZ comes back to Binance, and all of a sudden, the Asian token market is just has
did
a
he
huge
really
premium.
come back to Binance? We're going to talk about that
I don't
later in
really
the episode.
know. Yeah,
I don't think he did, but maybe.
Also, we have ETH-staked ETFs coming down the pipe. We're going to talk about all that news. Galaxy Digital launches a Robinhood competitor, and you'll never guess, Ryan, who's back to leading it.
Is it SBF?
No, but you know.
Okay.
Close.
We'll talk about that.
Not close. Not close.
But in the vicinity there.
In the vicinity, yeah.
Also, the New York Stock Exchange parent company, they just made a massive investment in Polymarket, a $2 billion investment. That is good things for Shane Copeland, who became, according to this, it says, the world's youngest billionaire.
Yeah, because
I'm actually not sure if that's true, but
it values Polymarket at $9 billion. $2 billion in cash is invested. Does Shane just open the company bank account and just sees $2 billion there? Is that how that works?
No, I don't think that's how it works, David. But we do have a Monad airdrop confirmation date, which is a layer 1 network that I think all of crypto has been looking forward to for some time, which may mean we're close to a mainnet. After 4 years, we're close to a mainnet.
Perhaps.
So we'll talk about all that and more. Apologies, Bankless listeners, for my voice. Again, going into the week a little sick,
You're doing great.
You know, we're gonna hold through this episode. David, we got to shout out our friends and sponsors over at IMMUNEFI. So what do they do?
Yeah, of course, security, as we all know, is the biggest issue in crypto. Security is paramount. Hacks and exploits have cost this space billions of dollars of actual dollars, but also billions of more dollars of just like legitimacy and trust that's lost with people who read headlines saying billions of dollars have been hacked from crypto. IMMUNEFI can help with this. They're one of the most trusted brands in crypto security with more than $180 billion in value protected and over $25 billion in hack and damage prevented. So now they're taking even further with the first security operating system for the on-chain economy. Think of it as a single command center that keeps your crypto protocol safe end to end. There is a link in the show notes, so you can go and learn more. Bankless.cc/immunify. That's IMMUNEFI. If you want to keep your customer deposits safe in your crypto protocol.
And you definitely should be thinking about that.
Yeah.
David, let's talk about Bitcoin on the week. So it doesn't feel like Uptember, but are we up a little bit on the week?
October. Yes, we are up 0.5% on the week. We did have an all-time high. So, even though we're flat on the week, having an all-time high midweek and still being up 0.5%, technically still counts. It just,
when
at
did
the
we
moment
hit
of
that
recording.
all-time high? October
that was
6th.
Monday or something.
That was Sunday. It was Sunday morning, I guess.
Sunday, yeah. 126,000 even. That is a new all-time high. Previous all-time high was in August at basically $124,000. We've got some commentators saying the United States government shutdown, loose liquidity conditions, narrowing performance relative to equities and gold is drawing attention to digital assets. That is the CIO at a bank who said that.
This wasn't a very noisy all-time high. Like, it didn't feel like there was some celebration, but it was fairly muted. I think that's just because it's like a technical all-time high.
Yeah, it's like $1,000 all-time high, $1,000 higher than last time.
Yeah, it just Bitcoin doesn't feel exciting as an all-time high until like 130K. Maybe that's just me, but I think we start to celebrate more when we actually get a all-time high that feels meaningful and sustained. I've been looking, David, you and I are both big Ray Dalio fans. I've long been looking for Ray Dalio to weigh in directly on Bitcoin. Like, Ray, what do you think about Bitcoin?
To validate our bags?
Yeah. He said good things about it previously. Of course, this is the big debasement guy, right? I mean, he talks about long-term debt cycles, the end of empires. He's a huge proponent of gold. That's probably worked out for him very well lately. And you'd think Bitcoin would be right up his alley. And it is kind of. Someone finally in a podcast asked him a direct question. Ray, is Bitcoin a legitimate currency? And he kind of said yes, kind of said no. So he said that he thought Bitcoin, some consider it as a money, some consider it as a store of value. But the big question for him was, would central banks consider it a store of value? And he said, no, probably not. And the reasons he gave, which are interesting, are it's not private. So he thinks that the public nature, the pseudo-anonymous and not private nature of Bitcoin makes it such that central banks will not adopt it. He also says there's code risk. So there could be bugs in the system. It's dependent on people. It's dependent on software, something that gold isn't. So his conclusion is, I have gold and some Bitcoin, but not very much of it. And I'm wondering how much of this is like a generational type take.
It is generational for sure, especially the code risk. Like Zoomers don't care about code risk. And you know what gold has as a risk is younger generations just not caring about it. So you accept the code risk and you decline the boomer risk. Like boomers are just not going to buy Bitcoin, and not comparatively to like Zoomers. And Zoomers just don't care about code risk.
Well, so when you say they don't care about code risk, though, is this because they're just like naive and they don't think about risk? They're young people, they're young and stupid, and they just don't think about risk like that? I mean, to me, I think a lot of people in crypto don't care about code risk so much as because these are social systems. Yeah. So let's say there was some infinity bug to supply in Bitcoin, some 0-day bug out there in a Bitcoin client. Say that happened tomorrow. Well, price would spike down. Price would react to that. But people would stop running that client. Yeah. We would fix it via a patch. It would get deployed. And then it wouldn't be, it's not going to drop to zero. Yeah. Basically. These, no one would accept a infinite supply Bitcoin as the actual legitimate Bitcoin. Therefore, code risk is not so much a risk as people think it is.
Okay, but to take Dalio's side, he would probably say, yes, you could just overcome that with a social fork, and then everything's fine. But it still is a mark against the legitimacy of Bitcoin, because gold doesn't have to do that thing. You don't have to socially fork gold.
Yeah, that's fair. Another clip I found interesting on the week is, what does President Christine Lagarde think about Bitcoin? Someone asked her that directly. Here's the clip.
Who is that? That is she works at the EU Central Bank. So we have the European Union Central Bank commentator.
Yeah, she's Europe's Jerome Powell, basically.
Yeah, exactly. Yeah.
Here's the clip.
So can Bitcoin be like a digital form of gold?
Okay.
No.
That's the final answer, right?
Yeah.
Shall we leave it?
I hesitate to say that, but I say it because I have no fear. Because I know that the social media tonight and tomorrow is going to hit me like crazy, because that's the community that they form, and that's the belief that they have, and that's the confidence that they generate amongst themselves. But I still am of the view that there is no intrinsic value and there is no underlying value to it, which doesn't mean to say that there is no hype created as a result, that some can associate with a value, meaning a price, which then moves up and down depending on what happens, who is instrumenting all this.
It's fascinating to me, David, that the reason she gives is there's no underlying value to Bitcoin. That's the reason it's not valuable, which begs the question of, why is gold trading at $27 trillion on the week? Again, do you think this is a generational thing? The idea that gold can be backed by nothing of value, but Bitcoin, that's a bridge too far. Right. Obviously, that can't exist. That's not a real thing.
I mean, this person is just the spokesperson of fiat. They are just fiat incarnate into this real world. They are the voice of fiat money. And so this is what fiat money would say. It's don't believe in Bitcoin because my life depends on this.
Yeah, they're paid to not understand this, I guess.
Yeah, exactly. Yeah. There's an interesting graph that went around. Who owns Bitcoin in 2025? Bitcoin, in the year of our Lord, 2025, is still predominantly owned by retail. 71%, almost 72% of Bitcoin is owned by retail. 7% of Bitcoin is in ETFs. 5% is left to be mined, 5% is owned by Satoshi Nakamoto, 4.5% owned by public companies, and 2.5% owned by countries and governments. Crazy how dominant retail holding of Bitcoin is.
Do you hear the headline take here, which is, I'm not selling Bitcoin until the country's bubble becomes as big as the retail bubble today. Do you think that is the end state? Regardless of what Dalio and Christine Lagarde think about it, central banks are going to have to acquire Bitcoin and hard crypto assets. That's just the future. Or maybe just younger generations take control of these institutions and they effectively become that.
Yep, that's exactly right. But that's always been the plan, is Bitcoin only works as a grassroots revolution for like central bankers to actually end up holding the bag and then having to buy all of our bags because we were buying drugs on the Silk Road in 2013.
Wait, speak for yourself, dude. Okay, speak for yourself. Hold on now. More evidence of this, though. Actually, some news on the week. We have the first EU sovereign wealth fund allocating to Bitcoin. This has never happened before. It's the country of Luxembourg, though they bought a Bitcoin position 1% via an ETF. So we're already working up that scale. You know, we got to the level of massive institutions, the BlackRocks of the world. Now we're getting into the big money, the big institutional capital, which is sovereign wealth funds. Luxembourg's the first. You got to start somewhere, man.
Got to start somewhere.
Well,
you know,
Luxembourg
no shade against Luxembourg.
They're like a startup country, right? Like, don't they have like digital identity rolled out and all of these different things?
That's right. Yeah, I think a very high GDP per capita.
Yeah, just the capita size is pretty small, I guess we should say. How about little brother ETH on the week? We should check in.
ETH down 3 or 4% on the week, down 3%, $4,300. Hit $4,750, was getting me real excited, and then immediately went down. So sad, but overall just down 3%.
Was that it, man? Was that October? Are we done? I gotta ask
October
you about
9th. We got 20 more days.
Okay, so I know you had a conversation. I was not feeling well, so I couldn't. But with Tom Lee and Arthur Hayes, and I'm hopeful you asked the question to them of what about the cycle? Because again, ticking clock right now. Yep. If this cycle ends like previous cycles, we only got about 2 months. What did they say to this? Short
clock. Yeah, short clock. Short time left on the clock. Yeah.
Give me some good news. Did they say something a little bit different?
Oh yeah, they're like, no. It's Fed liquidity, brother. It just is a coincidence that the 4-year cycle has just lined up with Fed liquidity events. And Arthur Hayes in the episode just goes through it. It's like, all right, the Bitcoin bubble in 2013, well, here's the Federal Reserve liquidity event. In 2017, here's the corresponding Federal Reserve liquidity event. So he maps it out. He correlates it. And that's why I think that this cycle hasn't felt so frothy, is because interest rates are at not all-time highs, but like have been higher than they've been in forever. And the Federal Reserve is only slowly cutting them. But they are cutting, and they're cutting them now slowly. And so my takeaway from that is like, oh yeah, just again, the whole plan is the slow cook throughout 2026.
So there is a case that the cycle ends this year, but Arthur Hayes and Tom Lee are making the case that we get an extended cycle just because the money printers are just starting to fire up right now, not only in the US, but in China as well. Did they give end of year price calls, by the way?
Oh, yeah. But I mean, come on. The listener's going to have to go listen to the episode.
No. Tell me what okay. We'll leave that tease out there then. To listen to that episode. It's in the queue. Good news, David. The bull market indicators. Remember the CoinGlass bull market indicators that we checked in? None of them have hit
our frothy.
Sell. Nothing's frothy right now. So this is kind of what you wanted, I feel like. You kept telling me the last couple of months, hey, I want slow, steady up. I don't want anything crazy.
We got a good thing going. Things are just up slowly. Maybe 1 month is down, the next month is green, but quarter over quarter, we are just grinding up, dude. We're just grinding up.
It's not as exciting. Okay,
we're all getting rich slowly, and by slowly I mean over 3 years.
It's great. David, we have the ETH staking ETFs, a world first. Who's doing it?
Grayscale. So they launched the first US spot crypto ETF that allowed access for investors to have staked Ethereum via ETH and ETH, and also soon for Solana as it's waiting for regulatory approval. So the Grayscale ETH will now pay distributions, but also ETH, the other one, just ETH, they have the ticker ETH for the ETH ETF. That's crazy. They will just roll staking returns into the NAV, and so it'll just compound over time. But also ETH-E, the old one, charges a 2.5 management fee. So ETH, the better one, charges 0.25 management fee. So
2.5%, you should say.
2%, yes.
That's 250
yes.
bips.
Yeah, 250. Right? Yeah, 250 big ones.
Versus 25 bips, which is a big difference. What would you prefer? Would you prefer getting the cash distribution every month? Or would you prefer just
no? I just wanted to roll it into the NAV. Roll it into the NAV.
Why not?
Yeah, because then I'm not taxed. You're taxed on income with distributions, right?
Oh, that's right. It's more tax efficient.
Yeah.
Dude, well done.
Thank you. Thank you. I've been brushing up on my taxes. Okay. DATs are not done yet though, because DATs also want to provide staking, which they do. They're easier to provide staking. So Joseph Shalom, former BlackRock ETF guy, now at SBET, strategic bet on ETH. He says, quote, having worked on BlackRock's Bitcoin and Ethereum ETFs, I've seen how powerful these vehicles are for institutional access and adoption, but some limitations are unlocking your staked ETH can take up to 40 days. It's usually not that long. And then also ETH ETFs will have to keep a large portion of their ETH holdings liquid, aka not staked. At SharpLink, we are able to stake 100% of our ETH, generating superior yield. On top of the yield, we'll develop new businesses that have ETH-nominated revenue, increasing our ETH concentration even further. So Joseph's saying, hey, we are a better product than even staked ETH ETFs.
Because our yields are higher, basically.
Our yields are higher, yeah. Mm-hmm.
Yeah, I mean, that feels like that lines up to me.
Mm-hmm.
I was gonna say.
But higher yields, also more risk. More risk. Not too much more risk. They're trying to be conservative with it. Well,
not just the staking. They can stake 100%. So right there, that's risk-free.
True.
That portion is risk-free.
I guess and that's identical. The risk profile is identical. Yeah.
Yeah. David, they're not the only ETF. Mm-hmm. This is not the only ETF news, I should say. Seems like it's going to be, we're days away from Solana getting its first, not their first ETF. They've had some
their first
more exotic,
good ETF. They kind of have this kind of hacky ETF that has been around for a bit. The
Grayscale, the 21 shares, the Bitwise, the Franklin, the Fidelity. Yeah. Those are coming to Solana. And the final SEC deadline is actually, today, by the time listeners will listen to this, the 10th of October. So Bloomberg is pricing, odds of approval is 95% here. Yeah. So it seems like it's going to be a slam dunk that this thing is going to be approved. Gotta expect this will be, what do you think? Do you think this will be a price catalyst for Solana? You think the market's already priced this in? What's your take?
I don't think the staking component of ETFs is a big price catalyst. Maybe
it's not just staking. It's all these Solana ETFs.
Oh,
so Solana's getting its first fleet of all of these super legitimate ETFs.
We saw what happened. We saw what happened with the Bitcoin and ETH price after they got their ETF. So I would expect to see some correlation with that.
Well, what did ETH do? It kind of slumped after, actually. Volumes weren't that exciting.
Yeah, but Solana doesn't have Grayscale unlocks to deal with. So that's actually a privileged position that Solana has.
I think they have some, right? They have a Grayscale that's rolling over. They must have some unlocks there. I haven't looked into this.
We'll see. The reason why BlackRock has been, I don't think BlackRock has a Solana ETF, and BlackRock's position is we don't see demand for a Solana ETF. That's why we're not doing it. But that was a while ago, so maybe there's more demand.
Yeah.
Coming up next, we're going to talk about the debasement trade. Gold has hit another all-time high and shows no sign of slowing down. What is that telling us? And scary? Is that scary? But also, there's the AI trade too. Also perhaps scary. Uh-oh.
Yeah.
And then BNB has now become the third largest asset in crypto, up 40% in 30 days. Why is all of Asia catching a bid? We're going to talk about this and more. But first, a moment to talk about some of these fantastic sponsors that make this show possible. Ethereum's Layer 2 universe is exploding with choices. But if you're looking for the best place to park and move your tokens, make your next stop UNICHAIN. First, liquidity. UNICHAIN hosts the most liquid Uniswap v4 deployment on any Layer 2, giving you deeper pools for flagship pairs like ETH USDC. More liquidity means better prices, less slippage, and smoother swaps, exactly what traders crave. The numbers back it up. UNICHAIN leads all Layer 2s in total value locked for Uniswap v4. And it's not just deep, it's fast and fully transparent, purpose-built to be the home base for DeFi and cross-chain liquidity. When it comes to costs, UNICHAIN is a no-brainer. Transaction fees come in about 95% cheaper than Ethereum mainnet, slashing the price of creating or accessing liquidity. Want to stay in the loop on UNICHAIN? Visit unichain.org or follow @UNICHAIN on X for all the updates. Imagine a world where traditional finance meets the power of blockchain seamlessly. That's what MANTLE is pioneering with blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. At the heart is UR, the world's first money app built fully on-chain. It gives you a Swiss IBAN account, blending fiat currencies like the euro, the Swiss franc, the United States dollar, or the renminbi with crypto, all in one place. Enjoy real-world usability and blockchain's trust and programmability. Transactions post directly to the blockchain, compatible with TradFi rails, and packed with integrated DeFi features. UR transforms MANTLE Network into the ultimate platform for on-chain financial services, unifying payments, trading, and assets like the MI4, the METH protocol, and Functions FBTC, backed by developer grants, ecosystem incentives, and top distribution through the UR app, reward stations, and Bybit launch pool. For MNT holders, every economic activity in UR drives value back to you, embodying the entire stack and future growth of this super app ecosystem. Follow MANTLE on X @mantle_official for the latest updates on blockchain for banking. That's x.com/mantle_official. Introducing KGEN, aka Verify, the world's largest verified distribution protocol, or VDP. If you're trying to grow a real protocol or app, you need real users doing real actions. If it's not Verify, it's just noise. At the core of Verify is Poggy, KGEN's identity and reputation framework. It helps you reach humans, not bots, and proves what your users actually did, so your budget goes to the right people. With Verify, you can run verified user acquisition with confidence, keeping people coming back with retention tools like loyalty rewards, quests and achievements, and even power AI training and evaluation using trusted, verified user groups, ensuring your models learn from clean data. And when it's time to reward your community, there's the K-Store, a global rewards marketplace where users can redeem perks that connect directly back to your app. Put simply, when growth is built on real users, you grow faster, and that's exactly what Verify delivers. If you're building in Web3, AI, or gaming, request a demo to grow your protocol at www.kgen.io/demo. That's www.kgen.io/demo.
The big news in all of finance this week was the gold all-time high. And let's start there because this signifies something that a lot of people are calling the debasement trade. What happened was gold hit a new all-time high, surpassing $4,000 per ounce earlier this week on Monday for the very first time. And just to put some perspective on it, this is up more than 50% this year. Gold, okay, up more than 50% this year, and it has more than doubled over the past 2 years. Reason for this, consistent buying of foreign central banks. China's definitely one of them. People say a lot of this is happening after the 2022 US imposed sanctions against Russia, and other non-US aligned countries are like, well, we're not keeping our money in treasuries, so they're buying gold, and that accounts for a lot of the price action. Also, retail is allocating to gold as well. But David, when you look at this, the list of the world's largest assets, gold is now like, there is no second best here. It's not even close.
God, it's not even close. No. Jesus.
Gold is 27 trillion in market cap. Okay?
That's so big.
That means over the past couple of years, David, they've added about, $12 trillion? 12 trillion. So how many Bitcoins is that?
Six Bitcoins. 6 Bitcoins.
When gold moves, with 50% or doubles over 2 years, these are like deca-trillion-dollar moves here we're talking about. NVIDIA is the second largest asset in the world, worth 4.6 trillion. So, by the way, gold is having its own alt season too. Not talking about it, but like silver is catching a pretty massive bid on this too.
The Litecoin to gold. Yeah, that's crazy.
Yeah, that's right.
This is the debasement trade, obviously. It's just kind of crescendoing right now. And why it's crescendoing, I think we would probably have to talk to some macro people to really get that answered. But this is, at some point, this has always been the trade. This has been the trade as long as I've gotten into crypto. It's just
the debasement trade you're talking about?
The debasement trade, yeah.
Yeah, it's basically like fiscal deficits, fiscal dominance. The US is like 7% of GDP deficit this year. Congress isn't stopping it. The economy's doing pretty well. And still Trump is like, yeah, you know what we could use? some rate decreases.
Yeah.
We could replace Jerome Powell with somebody who is much more dovish and willing to cut rates. And we're doing this at a time when, can we afford to actually do it?
Right.
I guess maybe we can't afford not to with our interest rate payments as a nation being so high as well.
I mean, when the United States national debt is $38 trillion and we're paying like 4.5% on that interest payments on $38 trillion, like gold doesn't need a reason to go up. That's plenty reason alone.
Yeah. I mean, when you even zoom out, right? It's always been taught to me that, hey, like the Warren Buffett thing, why would I buy something that doesn't have cash flows? It's not a productive asset. Why would I buy something like gold? That's stupid. You should buy US stocks, okay? Over the last 5 years, our best performing indice in the world has been the NASDAQ. It is up 98% over the past 5 years. Gold is up 112% over the last 5. Gold, this inert,
if you owned real estate 100 years ago, it's about the same value as it was in gold terms.
Yeah, it's incredible. Some more stats. Gold up 50% in 9 months. The S&P is up 10% in the same time. If you go back in time all the way since 2000, what if the stock market gains were measured in gold? This is, if they were measured in gold, this is all stocks around the world, all in the US. It's basically, down only as far as,
That's crazy.
Right. So, the gold bugs, your crazy uncle's right the entire time. Gold is on pace for its best year since 1979, up 51%, of course, as we've said. If you look at these numbers,
and the world's biggest asset, that's
the last time we saw something in like higher than 50%, going back through these years here, was all the way back to 1979. And so what happened in the 1970s? You get some really good return years for gold. 1972 was about 50%. 73 was 73%, 74 is 66%, 79 was 120.
What happened in 1971,
We
Ryan?
got off the gold standard.
we made our fiat currency worthless.
We killed Bretton
then
Woods.
Gold goes on a tear.
So it's the 1970s with respect to debasement. Again, that's what the 2000s are, it seems like.
Yeah. In the 70s, we took our dollar off the gold standard. And then in the 2020s, we can't pay our debt. So now we're printing a ton of money.
Well, the question is like, at what price point, though, does this become alarming? So right now, gold bulls are like, yay, celebrate. But if we keep having 50% years, this implies something is going very wrong with our fiat money systems. There's a comment from Twitter. Gold's parabolic move towards 4,000 is sending a warning sign to the traditional finance system. Developed market nations are losing clout as being good stewards of capital. This comes on a day when the US government has shut down due to dysfunction. France's prime minister resigned after 3 weeks, and Japan's new prime minister plans stimulus at a time of elevated inflation. Nation states are just like not handling their finances well, and so people are resorting to gold. But at some point, this gets like scary, right? This gets into like,
you're making comparisons to like when fiat currencies collapse relative to gold. It's usually not a good time, like the Weimar Republic in Germany, the Bretton Woods in the 70s. It's not a collapse, but it wasn't great. Anytime a fiat currency collapses, there's like discord and chaos. Like hyperinflation is different from gold appreciation, so we can cut off those comparisons. And also at the same time, like we're in 2025, like things are very liquid and fluid in capital markets. And so you investors have more optionality and more escape valves from the fiat system better than ever. And so, part of that is just like, it's very easy to buy gold now.
Yeah, and let's talk about one of those other escape valves, which is crypto. So how about our digital gold products? How about our non-sovereign store of values? How about gold versus crypto? We could look at that on the year, David. So dude, gold, as I said, is up 50%.
Never thought that gold would be beating both Bitcoin and ETH on the year.
It is. So Bitcoin up 30% on the year, ETH up 30%, 33%, gold up 54% on the year, which is pretty funny. Now, if you zoom out though, okay, if you zoom out all the way to Bitcoin inception in 2012, and you price Bitcoin in gold terms, okay, gold has been down only relative to Bitcoin, right? So I guess the answer is kind of zoom out. Although...
Yeah, that's not fair though.
It is fair, but it's not fair. I think it's like another look at it, right?
Yeah.
But I think the big question is, now that gold is 27 trillion, okay, well, we can just like make it like Bitcoin can catch up to that, right? Crypto can catch up to that as an asset class. And the question is, do you think it will?
Over the long period of time, yeah. It's just like, again, it's a generational thing. Right now, I think it's because the central banks are freaking out because the United States has all this debt to pay and it's just debasement. And so banks are like the largest financial institutions in the world are making this trade, which is why it's such a big move in gold and like trillions of dollars are sloshing around. But like if we are long-term investors, and I'm talking like decades, like what am I going to put my life's denominator into? It's going to be the internet equivalent of what is exactly going on, because slowly the balance of power will shift from the analog to the digital. That's the whole crypto thesis. And millennials and Zoomers, as we get our hand on boomer capital, central bank capital flows down into Zoomers' hands. All of a sudden, they're like, all right, you know what? If one day, Ryan, there will be a millennial Jerome Powell. What are they going to do? Like, are they going to buy? They're going to be like, we have a lot of gold and not very much Bitcoin. I am going to equalize those things.
I mean,
we
that's
just have to
probably
wait
the
for
case.
the millennials to own the banks.
That's probably the case. That goes back to the clips we played earlier. Although I will say what you just said is more the narrative, right? And this is certainly the Bitcoin crypto narrative, which is, hey, crypto is also a debasement hedge. Okay. There have been periods of time where it traded like that, where it was correlated to gold. So there was a long stretch from late 2022 to late 2024 that the CME summarized that gold rose 67%, while Bitcoin surged nearly 4%, and there was a relatively tight correlation. But there are other times, in fact, most of the time, these two assets have been pretty decoupled, okay? So it's a narrative that Bitcoin should catch up to gold and trade like gold and is a debasement hedge. But it's actually, in point of fact, Bitcoin is much more correlated to what the NASDAQ is doing. And so Michael Nadeau from the DeFi report wrote an entire post, which is basically the question of, does Bitcoin follow gold? And even should you have gold in your portfolio if you own crypto assets? And his conclusion was basically like, if you look at the data, no, not really. Bitcoin behaves as a distinct tech-like asset driven by adoption, liquidity, and reflexivity. It's not like levered gold. Gold is inversely related to real rates, and the dollar. Bitcoin shows almost zero relationship to either of those things, which is somewhat interesting. So we got the narrative that says, yeah, it's just like gold. It'll catch up to gold. It'll do what gold does. But in point of fact, it's actually still very much correlated to tech stocks and not the debasement trade. So we'll have to see if that changes.
Yeah, I do think Bitcoin and Ethereum, especially when they're so early in their lifespan, like Bitcoin's 15 years old. And so the first 7, 8, 9, 10 years of Bitcoin are just is like infant aged. And same thing with Ethereum. And so like the next 10 years of Bitcoin where it's more an adult, and same thing with Ethereum, I think it's going to have different investment properties, different comparatives than what we have when it's like a child.
I think I agree with you too. Okay, so that's the debasement trade. But the interesting point in history where we are, David, is that's one thing that's happening. It's not the only thing that's happening. We have gold all-time highs, but we also have stock market all-time highs. We have NASDAQ and S&P 500 all-time highs. So they are both up about 20%, 20 and 15% respectively on the year as well. And the real driver of growth, of course, we know 40% of US GDP growth this year has been AI. Okay. If you look at 80% of all of the gains of the US stock market this year, it's all been AI
companies.
An economist out of Harvard this week said this: without data centers, GDP growth in the US would be 0.1% in the first half of 2025. Okay. So all of the CapEx spend, all of the growth that we're seeing, it's highly concentrated on AI. And we also, there was a time where I think AI bulls have been saying, well, all of this is with cash-rich tech companies. They have really strong balance sheets, and they're just financing all of this CapEx spend with retained earnings. That has been true. It's starting to be less true. So here's a report. The amount of debt tied to AI has ballooned to $1.2 trillion. So we're starting to get some debt in the system, to fund some of this CapEx. It's not just retained earnings. And of course, we know what this looks like, right? So here's kind of a diagram of almost the human centipede of AI right now, where it's like a very small number of companies that are all cutting deals with one another and all pumping each other's shares up, right? So just this
NVIDIA
week,
has a bunch of money, made an investment, or OpenAI made an investment in India. NVIDIA, who bought, a bunch of Oracle stuff, who, makes a deal with Intel, who, competes with AMD, and then it all flows back into Microsoft.
Exactly.
It's all the same money. It's all the same, like $500 billion
yeah, so
being
did
sloshed
you see
around.
this week, like OpenAI does a deal with AMD, and AMD shares are up 27%. And what was part of that deal? That OpenAI would get AMD shares. Right. What the heck?
Hey, man.
Okay.
When the fiat money is worthless, like, this is to be expected.
Okay, so, but this is kind of weird. We got debasement going on. At the same time, we have something that looks like
hyper-growth.
Hyper-growth? Like, or what's maybe another word for hyper-growth that starts with a B? Is it bubble? Notable investor Paul Tudor Jones had a great interview on CNBC that I enjoyed very much. He actually compared all that's going on to the 1999 tech boom and bust, okay? And he predicted that a blow off the top was coming soon. So he said, hey man, I was there in the late 90s. This looks a lot like that right now. You're saying we're in 1999. For those that don't know the timeline here, October 1999, tech stocks were still booming like crazy. Meanwhile, by the way, the Fed was actually increasing rates. So monetary policy was tightening. It's going like from 5 to 5.5 to 6. Anyway, during this time, there was still a bull run ahead. And then we got massive gains from October 1999 in the NASDAQ to the top, which was March 2000. And he said, I see something similar here. We got price increases. We got the tech fervor. We've got the build out, everyone calling AI a new paradigm. And he's saying, this seems a lot like what we have seen before.
This feels a little forced to me. I mean, the .com bubble was truly a bubble in the sense that, bullshit was getting priced at billions of dollars because, it had just like you had an investment brochure. It's like the same thing with the ICO bubble. It's like you'd spin up a website and you could get hundreds of millions of dollars investment. And so like it was purely all just hype driven. And like, AI, it's not hype, man. It's like, these are the largest companies in tech. These are Google, Microsoft, Facebook, Meta, like NVIDIA. These were all pre-existing companies before AI came in. So that's a big difference, right? It's not just like anyone spinning up an IPO because they have a website, which is what happened in the .com bubble. And yeah, also like these are real products. Like I pay I have a $200 software subscription to OpenAI. Like I'm paying them $200 a month. That's ridiculous. Jeff Park pushed back on this. He had a tweet that I thought was useful. I'll read a small part of it. He says, I occasionally hear macro traders comparing the current bubble to 1999 because of the AI mania and stretch valuations, but this is quite a lazy thing to say in my opinion and should be taken with a grain of salt. Then he goes on to say a few things that you iterated, like the Fed was raising rates in 1999 and it's cutting rates now. I think the big one that I like from Jeff Park's tweet was in 1999, there was no Bitcoin, there was no social media, there was no smartphones. And today, money moves so fast. And there are just escape valves everywhere. And, markets are just way more informed these days. I mean, the 1999 tech bubble was because of the existence of the internet. We didn't have the internet to talk because that was what we were speculating on at the time. Today, we have the internet. Like markets are much more efficient, much more informed than they were back then. And investors have like a lot more optionality. And so I kind of see that all as like bubble armor, bubble resistance, at least as it compares to like the 1999 bubble.
I think that there is some bubble resistance, but I'm going to take more the Paul Tudor Jones case on this. Not necessarily that this is exactly like 1999, but you can see like overinvestment, allocation towards one specific area. I mean, there's at some price point where AI is just like promising far more than it can immediately cash, the same way the internet did. Like everything in 2000 about the internet did prove to be true. It just took another 5 to 10 years for that to germinate. And I think that might be true at AI. Not necessarily now, but at some point. Now, Paul Tudor Jones does say that like, hey, in situations like this, you cannot afford to be out of the market for the months preceding the blow off top. Okay. You got to be absolutely allocated because that's the time you get the 2x, the 3x, things get crazy. You just have to be cautious. And I do think it's worth being cautious about what is going on in kind of AI. They asked him, what assets should you allocate to? And this is what he said.
If you look at the biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure. There's a Morgan Stanley basket that's a retail flow basket that has all the meme stocks in it. It's up 67, 68%. So it's really what retail jumps on. So crypto, digital gold, that's obviously something that's very, very appealing.
And does that mean you're jumping on all of that right now?
Well, I'd want to have positions in all of it, for sure. So if you said to me, what are going to be the winners? Again, we have this race. The race realistically is certainly to the end of the year because that's when everyone marks institutionally. And then you have to figure out what's going to go on in next year. So what would I want to have? I'd want to have a combination of gold, crypto, probably the NASDAQ. I think, I want to say that I've said that before, and I think that's still the right one. And I think whatever the fastest horse is at this point in time probably has a good chance of being that on deck 31.
Whatever the fastest horse probably has a good chance of saying it. So he's saying crypto, he's saying gold, and he's saying the NASDAQ. The question is, though, if this is a bubble, what do you escape into? Would you sell? You sell for treasuries? Or just keep these assets? Like, if the denominator is shifting, what do you actually sell in some kind of an AI bubble? And I mean, I don't think that's clear.
Yeah, well, that's why I think part of this is happening. It's just like all of these tech companies have hundreds of millions of dollars to slosh around because of the debasement. So on one end, we have debasement because there's so much money. And then where did all this money go? It went into AI. And so that AI is propping up the valuations, not just because it's a bubble, but also because there's too much money around. Speaking of money sloshing around, we can get into some crypto native subjects finally. It's a big markets episode this week. BNB, a top 5 asset over the last month because it's up 40% on the month, 20% week over week. And, you know, it's crypto. Things move. Things are volatile in crypto. So 40% a month is not crazy. But when you're a top 5 asset and you move 40%, that's something like 30 or 40, that's like 60 or 70 billion dollars on a fully diluted valuation. So,
and it puts them at number 3, right? The third largest crypto asset, just behind Ethereum.
Behind Ethereum, yeah. They're also behind Tether, but of course, let's not count Tether.
And they were ahead of Tether earlier in this week, so they've been back and forth.
Right. Tether's coming in at $178 billion of stablecoins.
That's a stable
BNB,
coin.
Yeah, it's a stablecoin. But I mean, you know, I think it's funny.
Do you think that this price is justified, David? Why is BNB worth anything? Is BNB money? Is BNB a utility? What's the rev profile of BNB? Do you think it should be the third largest crypto asset?
I mean, you're asking very intelligent questions. I'm not sure if those are the right questions to ask in order to get
let me ask you another one then. So at this valuation, BNB token is worth 2x the market cap of Coinbase.
Yeah.
And interestingly, BNB token is not the same as shares in Binance.
No.
So
Binance revenue used to burn BNB. It no longer does that. All we can really talk about are some of the things that have happened in the last month. Aster, which is one of the new perp dexes to come in after Hyperliquid. CZ has kind of like king-made Aster. And so if you're on Binance Smart Chain, Aster is like the thing. And there's just been a bunch of wealth effect downstream of Aster. So if you're an Aster token holder, you're doing great. And so there's been a Binance Smart Chain wealth effect. Downstream of that is meme coins. If everyone's on Binance Smart Chain is rich, then like what happens next is meme coins. And so meme coins have attracted a lot of the meme coin traders on Binance Smart Chain. And overall, just revenue on Binance Smart Chain is like 3x over like a month-long period. It's like 3x more activity. So fee revenue has now exceeded Tron, which used to be just like a number 1 or 2 chain in terms of fee revenue. So Binance Smart Chain is like tied. It's like only Hyperliquid is generating more fees than Binance Smart Chain right now, which is kind of crazy. And so all of these have started to happen. The waves, the momentum behind Binance has definitely because of all the on-chain activity. Why it's 2 times a Coinbase, I don't know, dude.
Yeah, all of those reasons I think are right. There's also BNB holders get access to Binance airdrops. So it's like something like 2.4 billion in airdrops in 2024 awarded to Binance holders. So I guess that makes it a cash yielding asset as well. The thing is, I was digging into this that I didn't realize is there are reports that CZ holds between 60 to 70% of BNB tokens. And this is not transparent. This is a reporter who worked on an article for Forbes. I'll include some sources in the show notes. I didn't fully do the sleuthing to look this up myself, but it seems like it could be the case, right? Because Binance has a whole bunch of BNB tokens and he traces the wallet to that. CZ has a whole bunch personally. CZ owns 90% of Binance. He might have between 60 to 70% of the BNB supply. He's probably not selling.
Yeah,
right?
It makes it really easy to go up if your largest holder holds 60% and isn't selling.
Oh, there you go. But it's a different type of asset than something like Bitcoin or ETH or some of the other assets that are much more evenly distributed.
Yeah. I mean, there's been a wealth effect across Asian crypto, the Asian side of crypto. So MANTLE has been on just a pretty crazy run. MANTLE's trading at $2.50, whereas just like 3 months ago, it was trading at 60 cents. MANTLE is like the Bybit token, and that's downstream of the Bybit exchange. So that's it's also gotten a wealth effect. So overall, just the Asian markets are very, very hot. I didn't go to Token 2049. Neither did you, Ryan. Apparently, the token conference is just flush with cash. And so there's just like a lot of liquidity over there too.
Oh, there we go. David, what do we have coming up?
Coming up next, the world's largest TradFi exchange gave Polymarket $2 billion, making Shane Koppelman the youngest self-made billionaire. Also, Galaxy has launched a Robinhood competitor. It's not what I expected to come out of Galaxy. And you wouldn't guess who's leading it. Who's back? Who is back to be the CEO? And also, Ryan here has got 3 things that he's excited about. So we're going to get to all of that and more. But first, I'm going to talk about some of these fantastic sponsors that make this show possible. Introducing FRAXUSD, the genius-aligned digital dollar from Frax. It's secure, stable, and fully backed by institutional-grade real-world assets, custodied by BlackRock, Superstate, and Fidelity. It's always redeemable one-to-one, transparently audited, and built for payments, DeFi, and banking. The best of all worlds. At the core is FRAXNET, an on-chain fintech platform built to align with emerging US regulatory frameworks where you can mint, redeem, and use FRAXUSD with just a few clicks. Deposit USDC, send a bank wire, or tokenize treasury, and receive programmable digital dollars straight to your wallet. FRAXNET users benefits from the underlying return of US treasuries and earn just by using the system. Whether you're bridging, minting, or holding, your FRAXUSD works for you. Frax isn't just a protocol, it's a digital nation, powered by the Frax token and governed by its global communities. Join that community and help shape Frax Nation's future by going to frax.com/r/bankless. Frax, designed for the future of compliant digital finance. Bit Digital, ticker BTBT, is a publicly traded ETH treasury company that combines the 2 biggest metas of our time, Ethereum and AI compute. Bit Digital believes that ETH will power finance and AI compute will power everything. Bit Digital gives you direct exposure to both. Bit Digital holds more than 150,000 ETH with institutional grade staking and validator operations. On top of that, the company owns roughly 73% of White Fiber, an AI infrastructure business that runs high-performance GPU data centers that adds a meaningful exposure to the growth of AI compute with over 27 million shares. This is an ETH treasury backed by real operations, designed to capture staking yield today while positioning for the future of intelligent computing tomorrow. The ticker is BTBT. This ad is not financial advice. Do your own research, learn more about Bit Digital, and try their MNAV calculator at bit-digital.com. That's bit-digital.com. Bankless is being compensated by Bit Digital for this ad. You can find out more information by clicking the link in the show notes. Do you think that you're one of the best traders in crypto? Now's your chance to prove it. Bullish has launched their pro trading competition, a global challenge for professional traders now open to US residents. This isn't leaderboard clout, it's real capital, real strategy, and real rewards. The top 3 winners will each manage a 1-year, separately managed account funded by Bullish with a total of $14 million in Bitcoin equivalent capital on the line. Winners earn a 1% management fee plus 20% profit share, subject to high watermarks. Finalists will be judged by a panel of leading digital asset managers with recognition across strategies and regions, exposure to multi-manager funds and quant firms, and perks like access to CoinDesk data and indices, and consensus conference benefits. Build your legacy, seize the mandate, and register today at bullish.com/promotions/protrader. That's bullish.com/promotions/protrader. There's a link in the show notes for more information. All right, ICE, the Intercontinental Exchange, which is the New York Stock Exchange parent company, is investing into Polymarket. with $2 billion, valuing Polymarket at about $9 billion. Wow, $9 billion valuation for Polymarket. Apparently in cash. I don't know, Ryan. I think Shane has a bank account with $2 billion in it. That's what I'm reading.
Yeah, it's pretty good.
Yeah.
Shane, they're not only investing, right? They're also distributing. So again, this is the company behind the New York Stock Exchange is also planning to distribute Polymarket markets. Not exactly sure what that means, but that's part of the deal here.
Oh, interesting. I don't know what that looks like, but that's awesome. That's great for Polymarket. Shane Copland, founder of Polymarket, 27 years old. And this makes him, his net worth over $1 billion, which, I mean, congrats to Shane. I mean, on paper, he has to IPO or drop a token, which he hinted at this week.
Okay.
The Polymarket token was officially hinted at, not confirmed, but hinted at from a tweet from Shane Copland, who just tweets out a bunch of tickers: Bitcoin, ETH, BNB, Sol, and then ticker sign Poly with a little, emoji.
Well, there's a certain order to this because this seems to mirror the current crypto market cap by order. So first Bitcoin, then ETH, then BNB, then Solana, then Poly. So he's implying
in terms of attention, not market cap. This is an attention
attention,
landscape.
I see.
This is attention.
Maybe he's going for number 5 though.
Yeah.
In market cap there. This is not confirmed, of course, but would you call this a tease?
The founder of Polymarket just tweeted out a ticker that says Poly, dude, with a little emoji. So no, it is not confirmed, but it's confirmed. Come on. Now, is this the equity or pseudo equity of Polymarket, or is this a
what does the token do? Right?
We don't know what the token does. We don't know what the token does, but pretty interesting tweet nonetheless.
Galaxy launched Galaxy One. What is this, David?
It's a finance app. So I'd imagine you can deposit money into it, and then there are different strategies, as well as stocks and ETFs without commissions. And so just pulling straight from the Robinhood playbook. Earned interest can automatically be reinvested into crypto and stocks. I'd imagine Galaxy has a bunch of products and indices and ETFs. I would imagine that they are first-class citizens inside of the Galaxy app.
Yeah, this is. I didn't expect this from Galaxy. I
did not expect
this. This is a Robinhood competitor, right? You have crypto, you have stocks, you can do staking, you can do all the things, yield, all the things inside of an app. I always thought of Galaxy as more of a institutional Wall Street type brand, and that's what they have been doing. OTC trading, that kind of thing. Now they're getting into retail, and they brought a retail guy in to run it. Who is this?
Zach Prince, the former CEO and co-founder of BlockFi, which doesn't have the best reputation, but it's been a while. So,
it's only been 3 years, David. It's not been that long.
Plenty of time. Okay, so for those that weren't around or just don't remember, BlockFi was part of the downstream contagion after FTX and Celsius as well.
It's co-founded by Zach.
Zach was the CEO. And so it was a Bitcoin depository institution. So you could deposit your Bitcoin and you could get yield, something like it started off at 3%, but then it started to creep up 4%, 5%, 6%, started to be pretty compelling way to get a Bitcoin loan or just get yield on your Bitcoin. Turns out when FTX exploded and also Celsius was also caught up in that, the wave, the tide went out and BlockFi was caught swimming without trunks. And so they just didn't have money to repay the customers because they were giving out loans to Three Arrows Capital as well.
Well, most of the loans were Alameda Research, and then they had about $350 million on FTX.
Yeah.
So they had their money on FTX, and they had a $700 million loan to SBF's crypto hedge fund, which was defunct and bankrupt.
Yeah.
And that's where they were getting a lot of the yield. So that was BlockFi depositors' funds. So that money was gone.
Yeah, so a lot of customers lost money with BlockFi, and that's kind of the story there. Zach Prince testified during the criminal prosecution of Alex Mashinsky, and so we were able to kind of get some insights there. My big takeaway from Zach Prince was that he was kind of dragged down into the mud by competitors that were cheating. Alex Mashinsky was a fraud. He was cheating, and he made all of his competitors, it made their life way harder because he was literally giving away a Ponzi scheme, and legitimate competitors had to compete with that. And so they kind of got dragged down into the mud in order to just be market competitive with a cheater. And so that's kind of the
He wasn't a criminal. He didn't have
the more forgiving interpretation. Yeah.
Right. Alex Mashinsky had criminal charges. Wait, did he get? Is he in jail right now? I can't remember.
Alex Mashinsky's in jail.
He went to jail. Zach had no criminal charges, right?
No criminal charges for Zach.
But he did make a huge mistake from a risk perspective in giving funds to Alameda and SBF. He got totally SBF'd. Yeah. And as someone who lost money in BlockFi, I'm just like, that still kind of hurts.
Yeah.
You know, in their bankruptcy.
It's a little insulting to see him as the CEO of a retail deposit app.
A little bit, asking for more, crypto, asking for more yield.
But also, man, who's got more experience than Zach?
Oh, yeah. Totally. Run it back differently this time. I mean, I do feel for like the entire industry got screwed by Sam Bankman-Fried and FTX.
Right.
But at the same time, I'm like raising a little bit of an eyebrow on this.
Yeah.
Maybe we'll have Zach on the show sometime and he can tell us what happened. But
I think you're cursed with context, dude.
Oh, I'm cursed with only getting 50% of my collateral and paid in fiat, not in actual like Bitcoin. But another story there.
The Galaxy equity on the NASDAQ jumped 8% after the announcement of Galaxy One. And so Galaxy's just an institution these days. They're in everything.
Yeah, doing quite well. I mean, there is a case for their stock at these levels. I mean, they're a $15 billion stock. Look at Robinhood. They're north of 100 billion.
They're like almost 200 billion now.
Coinbase is 80 to 90, 15 billion. And they've
Coinbase
got
is higher than that.
They got the institutional side. Now, if this Galaxy One, the retail takes off, I mean, they've got a value appreciation story here. So that'll be exciting to watch.
Yeah. Robinhood coming in at $133 billion. All right. For those that pay attention to things like this, for the degens, people in the trenches, the Monad airdrop, Monad, the Twitter account, tweeted out, the Monad airdrop claim portal is incoming on Tuesday, October 14th. End of tweet. That was a whole tweet. And so we're getting, I don't know how they're determining who gets an airdrop because they don't have a blockchain to the airdrop to users. But somehow air tokens are going out. And Community stuff. And we will find out who and how we are getting tokens on October 14th.
But that means they're going mainnet, right?
Yeah.
It's got to mean that.
I think it's like an open secret that like the Monad blockchain is up and running somewhere. It's just not publicly accessible.
Oh, we should say, for people who don't remember, this is a layer one. It's an EVM layer one that they maxed out efficiency for.
Yeah,
so
they rebuilt
the entire EVM.
The EVM from scratch, brand new database, brand new execution engine. So right now, it could be, in theory, a brand new Ethereum client because it's EVM equivalent. It's not just EVM compatible. It's like the same thing.
And they did open source it, which is like credit to them. However, it's not a layer two. Yeah. It's its own separate layer one.
How much will the token be worth? We don't really know, but we do know that the OTC valuation for Monad as a whole is coming between 11 and $14 billion.
Wow.
So not a small chain.
Not a small chain at all.
All right, Ryan. We got 3 things that Ryan is excited about, and we got 3 minutes left in this episode. So you got 1 minute per thing, dude.
Each?
1 minute each.
Well, first thing is lighter. So we talked about it last time. This is a layer 2 perps on Ethereum. They just debuted on layer 2B. So they're getting a lot of traction.
They got their report card, their security report card.
Yeah, they got their security report card. And it was exciting from a couple of angles. Number one, doing quite well. So you know how hard these Pi slots on L2B are to acquire? They got 4 out of 5 in the green. Okay.
Wow.
Now they're still stage 1, but they're pretty close to being
stage zero.
Excuse me. And they're pretty close to being a stage 1. Not only that, they are debuting at number 6, the 6th largest layer 2 that exists. By TVL. Not only that, if you exclude all of the other layer 1s and just focus on app chains, right? App chain is kind of like single purpose app. All they're doing is perps. They're the largest app chain in Ethereum. And I'm just like, kudos. They're doing it the right way. This is the founder. His comment was, being an layer 1 is a bug, not a feature. And L1 is just an Ethereum layer 2 without any of the security and verifiability parts. As a property rights maxi, I love that because, Lighter is showing that you could do an app chain, be super fast, performant, and actually pass on Ethereum property rights. Like, it's kind of the way Vitalik has always wanted it to go. And it's an experiment we're seeing on that. So that was exciting to me. That's number 1.
We have a podcast with him. We are recording with him on Tuesday next week. So that will be in your podcast feed soon.
Number 2, David, is Coinbase and Brian Armstrong doing the DeFi mullet, just continuing it. It's been a number of weeks we've talked about this. This is Brian Armstrong. Now everyone in the US can access millions of assets on Coinbase, excluding New York. Sorry, David. But this is within the main Coinbase app. You can go in Coinbase, anyone of your friends, your family that has Coinbase, and they can buy pretty much anything. They can buy Fluid. They can buy meme coins.
Anything on Base.
Anything on Base they can buy, which is a whole lot of things on Ethereum. And they're doing this through a DEX. So it's going through Base on chain, but you get the same user experience as if you're on the centralized exchange, except it's creating a non-custodial wallet for you. You're doing it through Uniswap or Airdrop, some sort of DEX aggregation, and you're doing it on chain. So this is the DeFi mullet in action. They are also
it's a good-looking mullet. It's a good-looking mullet.
And they rolled out Morpho, and this is, of course, like DeFi borrowing and lending, and this is at already 200 million in USDC. So this is Coinbase. The thing preventing us from doing the DeFi mullet has always been regulation, and now regulatory is open, and so we're doing it, and you love to see it. That's the second thing.
Last thing, what is it?
Last thing is Ethereum's privacy wallet reference implementation. Okay, so if the EF has been talking a lot about privacy recently, and I'm like, okay, you're talking about it, but what are you doing? Well, this is one of the big things that they're actually doing. It's Kohaktu, I believe I'm saying this right. So this is a privacy wallet. They're taking the Ambire wallet, they're forking that, and they are totally building it. So this is the EF actually building kind of a wallet, building
Wow,
app.
the EF is building a product?
Yeah,
Wow.
but they're doing it full soup to nuts, full privacy. Because if you look at all of the wallets in crypto, just in Ethereum on the market, none of them pass the privacy test, right?
Yeah.
You have private token transactions. No. Not your RPC, it's known. They can track your IP address.
Yeah.
So this is a wallet from scratch that's going to do soup to nuts, true crypto privacy. Private sends through various privacy protocols that already exist, like Railgun, private receipts, private payments. You're even running the Helios Lite client behind the scenes. So you're creating one account per address. Anyway, this is the EF being like, okay, we haven't seen a good wallet on the market that respects privacy to the degree we want it to. So we're building it, and you guys can use this as a reference implementation. It's great to see.
That's the most bullish thing I've heard out of the EF, because no chain has privacy other than actual privacy chains, but then you can't do anything because you can only do privacy. If they can actually establish privacy standards for crypto wallets, that's just a huge selling point for so many people.
It's very one of the most cypherpunks I've seen them do. David, we got a moment of Zen. You found this for us. Set it up.
Yeah, okay, this is El Coco. We have done moments of Zens from El Coco before. He is a fantastic singer-songwriter, and he makes songs about crypto, about ETH. It's our favorite subject. And I don't know, I just listen to these little songs that he makes. They're really well done. They're really good. I get proud. I get proud of it's very wholesome.
It reminds me of 2021, 2022.
Yeah.
So enjoy this, guys. Got to let you know, of course, none of this has been financial advice. Crypto is risky. You could lose what you put in, as I'm losing my voice right now. But we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
ETH is money. ETH is money. What's a big improvement on the current system, and it ain't even funny. Now the word money is confusing. It's more than just currency. So I did research and wrote this song about what money means. What is money? What does it mean? Well, it's a way to get you to do something for me when I don't have the thing that you particularly want. Because we all bring different things to the table, and that's what makes society a thing. And people want it like a thirst, and they always put it first. It's the thing everybody uses to measure other people's worth. It's easy to move, there's enough to go around. It should retain its value, and that's what we all call sound. I may come off as cynical, but I just understand. Humanity's doomed, but there's still room to improve things while we can, and eat some better money. Yeah, eat some better money. Hard money. A future built on money Legos is looking kinda sunny. When the system's built to not extract, it's amazing what you get. How about a loan you don't have to pay back? Self-repaying debt? What executes no matter what is told? Ethereum. What inflates less than gold? Ethereum. But will issue enough in perpetuity to uphold security? Ethereum. What's the safest coin to use? In dApps and L2s. When base roll-ups interoperate, what will be the glue? If we want to scale to worldwide use, then no chain is prepared. But only one chain's really facing this. No others compare. So what's so good about it? Don't have to store it in a bank with a greedy CEO that keeps all of the interest made on all your hard-earned dough. Don't have to put it in a mattress or hide it in the dirt. You retain complete control while you put your funds to work. You can loan your ETH to the highest bidder on the other side of the globe. He's guaranteed to pay you back, it's written in the code. You can start a business enterprise with strangers you just met. And no one needs to know your name, no red tape from the government. And money, ETH is money, programmable money. The current system costs too much and it's as slow as honey. Why the hell do I need permission to Venmo my friend who paid for lunch? Why do I need to put my name and address and social security number and whole goddamn life story into a big honey pot so the banks can say, hey hackers, look here, I got a whole company full of employees for you to socially engineer. ETH fixes this, by the way. And ETH is money, just try to take it from me. You can't. The most pristine collateral used in DeFi, and it ain't even funny. It takes away the power from the banks and the governments. Money's just a product of people agreeing, and they're deciding, it seems to me. And when people use Ethereum rails, the money's always ETH. So when Ethereum's used by all the governments, companies, and people in the world, what's the money underneath? Well, it ain't Bitcoin. You know that's right.
Well, you know what? At least it's an authentic human sounding episode, right? AI can't do that.